Welcome to Markets Now. I'm Michelle Rook with Scott Varilek with Kooima Varilek. Well, the grain futures are mixed this morning. Row crops higher, wheat lower, and in the livestock futures we're mostly lower except for nearby live cattle. Scott, thanks for being along with us. Let's talk about live cattle first. I said the front end of the board trading a bit higher. We saw bull spreads in effect yesterday and again here today. So we're trying to get cash and the futures to come together on that nearby, right?
Yes, and thanks for having me. And it's been a good cash run. We're on our seventh week in a row here of looking at these steady prices. The South got 188 kind of bids from everybody. It sounded like I didn't hear a lot of traction. There's never a bunch of traction in the Southern cash market, but yeah, I think that's a victory that they can at least achieve. The steady market in the South continues to say, hey, upper 190s, that's where we're at. And getting cattle sold that way. So dragging those high cash prices all the way to the end of July is impressive. That's why the market's finally saying, okay, we're not going to come down and meet here. So finally getting some life out of the August futures. October's had a little run and feel good about cash here yet going forward, because what do we have in the beginning of August? We usually have that Labor Day buying run. And I think that's still going to happen. I think our demand is held together very well. So I think, yes, you're going to want to dive into pence. You still got this extreme positive basis, one that we've never seen in the end of July. That's just so impressive. So I think you're going to want to be diving into those pens. These cattle make money for these guys. They're going to want to try to start sorting and getting some sold early. And I always want to take advantage of that cash in the beginning of August, because you get towards the latter part of August and into September, that can be a little sluggish. Yeah, it's a year like no other. Where are the numbers at? We're tight. It feels like we've had the leverage. The producers have had the leverage for a long period of time here, and just don't see that changing all too swiftly here.
Yeah, but you see in the North, we haven't had much trade. Are we likely to be steady as well there?
I guess that is my kind of feel that everybody's going to kind of stand. We've gotten that, that 198 trade did slip down to 196 a little bit last week, but I think asking prices are going to be up in there, that 198 again. We're maybe needing some more time. I feel like the carcass weights have not backed up what I'm trying to say with guys should be selling early. So yeah, a little bit of a head scratcher there, but yeah, I think that's kind of the goal, is to try to get it steady, but it has been pretty quiet. Packers are out and about. So far, there are some packers that need cattle. That's been week in and week out. Did hear of a plant breakdown this morning. We'll see if that has any lingering effects, or even how serious that is. It could be a door handle fell off. I really don't know, but those rumors can kind of circulate fast. And if there's not cattle to be had, yeah, then it's kind of easy to do some of those maintenance things on a packer's perspective. But I think you get into the beginning of August, they're going to want to mow some cattle for that Labor Day run.
Well, and that's been the MO here in the market. The Packers have been slowing those chain speeds, right?
That's kind of been the feel. It's almost been for me, it feels like a little bit of a rotating carousel on, some struggles here, struggles there. But you've got a market that's at record high cash. So anything that can slide a little bit negative to the market, we get panicked and it comes out in bigger fashion than what it normally would. Might just get swept under the rug a little bit more. But with us at these prices, yes, there's risk, because we know we're high, and there's a chance this market's going to roll over sometime. And I think there's still that group just waiting for the when. But tight numbers moving forward here, yet it's got a pretty strong feel. And when you have cash steady for 7 weeks, that's pretty impressive.
It is impressive. And, like you said, boxes have slipped a little bit, but choice boxes still above the 312 level. I was also impressed yesterday that with the stock market meltdown, that cattle held together pretty decently.
Yeah, I hear about the boxes slipping, and that gets highlighted a little bit too, but still at 312, that's still nothing to sneeze at. I think that's holding together pretty well. And
Yeah.
yesterday's stock market, I would have thought that the cattle would have traded that just a little bit. It's odd that, the stock market can be sharply lower someday, and so are the cattle, and we blame it on the stock market. Well, then you get a day where it just apparently doesn't matter. The stock market's down sharply, and we hold stronger. So that's good that they fought that day off.
Yeah. Do I dare ask you about the head and shoulders formation there on the charts?
You can, because everybody's
just in live
talking
cattle,
about it.
or is it in feeders too?
In the live cattle is the one I was looking at here. We can pull up the feeders too, and they're kind of similar. It's a little bit more leaning, but the we've had the left shoulder, we had a head, and now we're kind of at this right shoulder level. And that chart formation is my least favorite chart formation that there is, but it's one that's out there and people love it, and they do like to talk about it and trade it. So the risk would be we've got this little bit of a sideways range that we're kind of chopping in, a kind of market that, if you buy high or sell too low, it takes a little while to wiggle out of it. So it's been a buy low, sell high kind of a feel to it. But when it gets down to the bottom of the range, if it does, if it doesn't break out to the top side here and we slip down to the bottom, then if it takes out that neckline, then that's a negative looking chart formation there, if it would do so. So have to keep an eye on it. I don't like to put all my stock in charts by any means, but it's something that I'm going to have to respect here.
Yeah. Feeders are trying to come back in the nearby contracts as you and I tape this, but feeders have had a little correction. Has that been the higher corn, or the fact that the cash index has started to slide from its highs?
Yeah, you use the word trying, and I think that's okay to use, but they're not trying very hard.
Yeah, I know.
To me, they're just kind of drifting to the bottom. We've got all these these northern videos happening, and the sale barn news. Those prices are high, very good. So there's got to be some serious optimism out there, and thought that those prices might have carried over to the futures a little more. So I guess I'm wondering. I didn't think that the feeders would have to really respect this last corn rally yet. I don't know if they totally believe this corn's ready to head to some new levels. I don't think that. So a 20-cent rally in corn, it's probably not going to mean enough for me to take a long stance on changing the feeder calf prices. I think it would have to be a little bit, more of a move, like a 440, 450 before they start to dial that in. And that's just my opinion. I still think we're, a bulk of us in the, mindset that this corn's going to stay cheap. We're not going to rally too far. So we're kind of putting that in the bank that's going to happen, in my opinion.
And hogs taking a little breather this morning, maybe a little profit taking, but it's been a nice run here, pushed by what looks to be some renewed demand. Cash and cutout values have both been responding.
Yeah, with all of the whipping around in this hog market, I don't know who's got profit to take anymore.
Yeah, I gotcha.
There's my little joke for you, but it had a good run, and some of the news.
Maybe it's hedge pressure, Scott. I don't know.
Could be. But what we're hearing, I guess, is Mexico, some disease issues, and they had some stronger interest in our pork, looking to us because they could buy it cheaper here. So that's good. Needed some export news on a market that was probably beat down enough. So getting some of this back. We've got the hot weather, so that's going to pull some weight off. From here, it's going to be hard for me to say these August hogs can challenge that upside much more, because that index has been so flat since April timeframe, end of March, April. It's been flat, and producers have been liking that index is held. They had some good break evens, and they've been turning some profits there. It's been working for some of those guys. So, and that's been hanging around the $90 area. So now August challenging, an upper move, and I feel like it could run out of gas. We're going to need that cash market to get stronger. Yeah, cutouts up 104 and change, so that's good too, to kind of fall back on. But we'll see if they can sustain it, I guess. And I'm not a huge believer in that.
Well, just for reference, the index right under $91 right now, and exports this morning of a little over 30,000 metric tons. So that was a good number. Let's talk about the grains, at least the row crop sector. We've seen some fun short covering Have we been adding weather premium, or is there something else that you think is going on in the market?
I do think a little bit of weather premium has been put into this market lately. We're seeing some July, August like weather, and we've been, had such a good start to the rain, and now it's maybe slowed down a little bit here. But we're just at a pivotal point to where there's just that touch of uncertainty. And I think as you talk to farmers, and I guess in my neck of the woods, and the potential of this crop is just big. It could be a very good crop. Things look good. Just need that timely rain to kind of put the bow on top of this box. And the longer we wait, then okay, maybe just that little bit of uncertainty creeps in. So that's been part of it, having to put some of that weather premium in, but seeing the funds shake loose of some of these shorts. I mean, they've had their foot on the throat of these grains for a long period of time, and they're going to need to get out of some of these shorts if it's going to start to rally. I mean, and so we saw some of that. Is that going to be sustained? Unsure, but we're going to have to watch that weather. That's going to be pretty important here. If we can get that timely rain or not. I mean, if it happens, then I think these markets can head lower. Then we'll start diving out into the fields and seeing what it is. So that's kind of our supply side of the market here.
Yeah, demand has been a little bit better, and we had another almost 10 million bushels of soybeans sold this morning, new crop. So demand's picking up a little bit, right?
Yeah, demand seems to be doing what it should do when prices are low, and now we're getting a positive basis on this corn in some of these regional areas, and that's kind of been leading the charge. It's giving farmers an opportunity to make some cash sales. You've got a board that's lower, so I think some of that old crop that guys have been sitting on, there's opportunity here to let some of that go, especially on corn.
Thanks so much, Scott Varilek with Kooima Varilek. That is Markets Now.